Thank you so much for joining us today, Nicola.
No, no.
I
I
told
know
the
you.
community I've been trying to talk you into coming in to join us for well over a year. Thank you for finally
I got. Well, I got cold.
granting
I
an
got.
interview.
I feel bad because got cold feet every time, and I would think, oh, why does anyone want to listen to me? So,
Well,
um,
yeah, I know the Twitter world was pretty excited about you coming in to talk to us today, and don't sell yourself short. I did
okay.
read. I did read your bio. And it's interesting that you were a traffic controller for the Royal Air Force. I know I used Israeli jets to promo you on Twitter.
Yeah.
So here's my question to you. Once you started trading, which I also read, classical technical patterns and harmonics, etc., did you feel uncomfortable seeing the lines intersecting, which you had to avoid as a traffic controller?
Um, no, I think I felt uncomfortable though all the time, and I think I was an air traffic controller in the military, and
Right.
after that I was an air traffic controller at Heathrow as a civilian controller for a few years, and it's really uncomfortable feeling because you sit there most of the time expecting, you're
Yes.
rattling it off, but you're always expecting disaster to happen, and
Yeah.
it's pretty much the same feeling in trading. So I would say if there's one transferable skill,
Okay,
it's
it
probably
prepared you for worst case scenarios, which, you know
it.
what? Most people are not prepared for that when they come in because all they read about on the internet is hype and 500% returns and 200 to 1
Exactly,
average.
and how
So,
much they can make.
yes,
Exactly.
right. So, risk management was a skill that, and it was even more important because it was about life. You know, money comes and goes, time is gone forever. So, obviously, you want to avoid catastrophes financially, but it's not the same responsibility you had with lives depending upon you. So I hope
No,
it took a little pressure off you to get out of that career.
it did. I don't think I realized at the time I was quite a bit of a zombie. It took a lot out of me. But when you're in it and you're in the thick of it, it's like when you're in a trade, you have to just keep focusing and working. So, but it's an uncomfortable feeling, and trading, is not a comfortable feeling either. So you have to learn to be able to still function and make good decisions, even when you're not feeling super comfortable about what you're doing
So
or risk. So.
right. So the beginning of your story is that you noticed a bank that's not around anymore, a chemical bank, was recruiting a female trader, and
That
that's
happened.
what. Huh?
That happened before I was there. They recruited a whole
Right.
bunch of traders to train them. They recruited a whole bunch of controllers to train them as traders because they thought that they would make good traders. It turned out that they actually didn't. Only one made it, and it was the woman, and she did really well. And so I always thought, oh, I wish I could have done that because I always had a fascination with the markets, and
Yes.
so I always said, oh, if they'd have picked me, I would have made it. So
So,
I don't
so
know.
okay. So
So weird.
obviously you found an alternate route outside
Yes.
of chemical bank. Tell us about the beginning of your journey and
So
how you became a trader, and did you have mentors or people that influenced you early on in your journey?
Um, yeah, I met a guy who worked for Victor Sperendio, the um, Mar Wall Street guy, who wrote a
Right.
book.
The name's
And
familiar to me.
yeah, and so I got this book, and I then, my mom, when I was a teenager, gave me an account and I let me buy shares, but I really never thought, oh, I could just trade other stuff or currencies, or I really never thought about it, and I was really quite busy, and I got this book, and I thought, wow, you know what, I could do that, and yeah, so I started out. My first strategy I learnt was a moving average crossover strategy, which still
Okay.
works really well.
Isn't that
And
something?
but it really is. But I would not honestly be here today or profitable if I hadn't had a mentor. And I did have a guy. He was really mean. He made me cry a couple of times, and I know. which I
I'm
never did.
sorry.
I never did in the Air Force, and I never did that at Heathrow. But he made me cry, and he
Wow.
really beat some sense into me,
Well,
and
you'll never
I owe him a
forget
lot.
him, will you? Huh?
Oh no, I won't. No, I won't. He was really mean.
Still trying. Still trying. So you learned with a very tough cast master. You know, there are a
Yeah,
lot
he
of
had.
athletes that have very difficult coaches that never validate them, that are always on their backs, and they look back and they go, you know what? I may not have liked playing for that guy, but that guy taught me a lot. I learned a lot from going through that experience. So, what did you learn from this
Oh,
mean
like
guy?
just discipline. Like get over yourself. Get control of. And don't give up just because you had a bad day. A lot of
Okay,
people get into trading and they get discouraged or they burn up their capital before they've really learnt to master themselves. And
right.
so, yeah, he helped me with that really. I
You
owe
know,
him a
you
lot.
never really know how good you are until adversity strikes.
No, or a paper trading, you think you're a genius, and
Yeah.
then when you go with real money, you go, what the hell happened? How is this so different?
You
And
know what the worst thing that could happen to you when you're paper trading is you get a paper cut. So
exactly,
I actually mentor people not to use demos, but to use micros so they have a little skin in the game and they
exactly.
get used to the emotion of having money on the line. So why don't we, if you're open to it,
Yeah.
share your screen with us? You go to that green box up there with an arrow, and you know
Okay. Yeah.
we had the biggest week in the euro since the
Oh,
financial
I
crisis in
know.
March of 2009. And now the debate is on. You know, the bears are going, what a great selling opportunity. Very few bulls still thinking that could have been a significant low, and parity has just been put off a little while. Curious what your views are going into the Fed, which is only a week away on some of these different instruments. So I see your charts now.
Okay, so I just here's my euro dollar chart. Like I'm a big fan of measured moves, ABC corrections. I'm always looking for. I think they're great trading opportunities. And for me, I'm just going to go to my.
While you're
So I
trading grains and coffee, or you have the whole commodity world on your screen right now.
Oh, have I shared? I thought I only shared one screen, but I'm
It's
sorry.
okay.
Yeah, no. Can you? Okay.
Um,
So
I still
yeah, no,
see,
I
I still
do.
see, I see the corn and the beans and the coffee.
Okay, I'm on the wrong screen. Hold on. Let me
So maybe you have to
fix that.
unshare and then click
Yeah,
and then share
I'll
again.
sort that out. Stop sharing and I'll pick the right screen this time. I'll go to this one. Um,
Who thinks Nick is doing great? Could you tell that this
I'm so
warrior,
nervous.
this trading warrior sister has stage fright, and you don't have any stage fright with us, so
Okay,
it's a
thanks.
great interview. I'm still there we go. Okay, so I have the
Okay, so
euro in front of me.
here's a weekly chart of the euro dollar. I really see this as an A B C D correction. So this is the first leg of the correction. This is the second, and I'm looking for a third leg before we continue lower, and a proper tag. We could go all the way up to 118, or we
Yeah.
could stop back in the 114s and kind of make a wedge. But that's basically what I was looking for. I was looking for this low to hold, yes.
Okay.
Um,
Well, yeah, that was a huge day.
and so
So
it was a huge day, but if you come down, if I go to a 240-minute chart, you can
you're
see there's
looking
a
for
really nice,
107.5 or so for an entry.
yeah, so I am. It was a really nice declining wedge, a false break at the bottom of it. And
Right.
so, but that was really hard to catch on the day. Like you have to be really. So the same here. Yeah, I'm looking for an ABC correction. So I
Okay.
expect we'll do something like this, and we'll come down 107.5. We might even just make I don't know. Depends how many trap shorts we've got. Because this was a very crowded trade. I think
Oh,
you can tell
that's
that
why
by
it
the
happened.
reaction.
I mean, I was looking for 110 in about 6 weeks, 8 weeks,
I
not
know.
not 3 hours.
I've seen some really big December moves in euro dollar before, though. This isn't the first time. And you know, when the Fed did, I think I'm really quite bearish the dollar. When the Fed did QE, every time the dollar would sell off and sell off and sell off until they actually did the QE, and then the dollar would rally. And each time the Fed did it, like it happened quicker. So the market does really learn. And if you go back to previous rate hikes, which are a long time ago, in each time the dollar sort of topped out just before or at the same time that the Fed started hiking.
You know, that's
So I think
interesting, Nick, that you bring that up because the typical psychology of rate hikes is talking about interest rate differentials, euro being on an easing track, we're being on a tightening track. That's got to be bullish a dollar. But lower rates actually can strengthen an economy, or at least asset prices. And higher
definitely.
rates actually could be negative for the dollar, especially since the economy is not exactly flying with the manufacturing sector and what's happening globally. So perhaps higher interest rates are actually bearish for the dollar rather than bullish for the dollar.
Yeah, you know, I think especially if people think that if the economy doesn't improve and the market thinks that the Fed's made a policy mistake, that's going to be even more so amplified. Yeah.
Well, it won't be their first.
No, you know, and you remember Trichet did it with the euro as well. Like
Yes,
that was a policy mistake.
that's what I've been saying until we pull a trichet, maybe in the spring.
Yeah.
So when you were back at that weekly chart and you were looking for a
Yes.
recovery to 117, you sounded like an E-waiver to me.
I'm
Is
not.
that I think E-waivers would call a move back towards that as a flat, back
They,
towards
they, they would
117.
they would call this a flat, and I think that's what it is. I kind of look at harmonic patterns and I use probably Fibonacci more than Elliott wavers do, but I suppose looking at Elliott wave just from the other side. So many of these patterns line up with what Elliott wave look at. I just don't know their terminology, all of it. Like
Okay.
I am learning some, but you
Okay.
know, I'm by no
You don't
means an
have to
Elliott
know the
wave expert.
label if you don't have to know the label or the title of a song
Right,
if you could sing it.
exactly.
Okay,
Yes, I
so
completely agree.
I, I got it. So that's
So
pretty much. So you're pretty bearish on the dollar, and maybe it could turn into something more than a flat. Is that a possibility if we get up there? People are going to be
um,
calling this a bear market rally. 123 is a fib number. Uh, any possibility for some gaps to be
absolute.
filled? Like, how about that weekly gap, Nick, right around 121 or so?
Yeah, absolutely. I just got to take this off. I've only got futures charts. I'm sorry, so they might look a bit different. Definitely, you know, what happens when we rally will tell us what we're going to do from here. So
Great point.
um,
That's a pearl.
you
So it's
don't
going to be
know.
the
Like I think
character
it's
of the rally, whether the up moves, which you have to call Friday impulsive, and
yeah,
that the corrections are more about time than price corrections would tell you something, right?
definitely, yeah. And
Okay.
sentiment, you know, there's so much that plays into it. So I try not to be too fixed in my ideas. I'm always looking at where the next turn might be or when people are wrong side it. Next
Well, you
week's
know
going to
what
be
the
so fascinating with the Fed. You know, so many
yeah.
people are so sure they know what's going to happen. And the
Yes.
ECB taught us that you should never rely on the
Right.
central bank.
I'm
Or
sure. I'm sure I don't know,
no.
but I can do a Janet Yellen impression for you quickly.
Oh,
We
I want to
might
hear
raise
that. Go ahead.
rates. Here it goes. We might raise rates if the data is strong enough, but if it isn't, we may wait a little longer and then raise rates unless we don't. How about that?
That's a really good impression. He
I
is really
told you
good.
we'd have fun. So, you know what? it's starting to remind me of the euro, and now you have people talking. So I saw commodity charts up there, Nick. So I know you're watching the
So
oil
commodities,
market.
yeah, like I am watching the oil, and you know, if the euro dollar properly bottoms here and keeps going, like oil will follow it. It will. It just does.
Okay.
Like it's very correlated up until recently. They will converge again. So oil does follow the dollar,
Yeah, but
and I think like
you know, the big debate is there's some of us looking for around the 35 range. All I know is when I start hearing people talk about $20 crude, like it's a layup next year, 30 for sure, which is I think certain production costs. And for the first time in a long time, someone in our chat room said, "Do you think oil could go to 10?" Definitely makes me want to think
I'm just
about
gonna
taking the other side of things.
I'm just gonna share my oil chart. Hold
Do you
on.
correlate the oil when you trade? Do you do any kind of correlation work? Like I watched Canada, the way crude looked last week told me not to try and top pick Canada yet. You kind of look at things holistically with correlations and relationships too, or do you treat each market like it's an individual animal?
No, I treat each market like it's an individual animal, but I do pay attention. So I won't take a trade in something just because something else is doing something. But I
Mm-hmm.
do like pay attention. So if one market turns, then you can then pay more attention to another one to see if it's going to do the same. But like
Okay.
if you look at so here's a weekly. It's a bit
Yes.
messy. I haven't cleaned this chart up. Sorry, but if
That's
this is a
okay.
weekly chart
Mine
of
are messy.
oil.
Yeah.
And you can see that like each time, you know, they do proper double bottoms and they take out the previous low. So like here at the end of 2011, this is a monthly chart. You can see we made a slightly lower low and then totally ripped off it. And quite often we'll do that, like it'll double tag and then carry on. This high here, look, a high, and
Yeah.
then the next month took it out, next month took it out. I could quite easily on this chart see that we take out those previous lows and then really rip in oil.
Okay. What a
Not
great
like
look.
I'm not going to say, oh, we're going to 80 or $100, but you know the sentiment is super bearish at the moment,
How
and
about back to the confluence? They look like moving average lines to me back around 62 again on that
exactly,
last chart.
yeah, no, exactly. Actually, Crude has a favorite Fibonacci, which is the 78 Fibonacci. It'll go back
Okay,
there if it can.
78.6.
78.6. It almost always.
Okay.
And you can go back and take a look, like even on an hourly, like it works on most time frames, but you'll see that it really likes that one.
That's a pearl.
That it's one of my top tips, which that would take us back to about 48. So, for if we bottom
Okay.
here,
All right.
but
What
it's
about gold? You know, the gold shares. I was schooled that the shares turn before the commodity, and gold kept making successive new lows, new lows, new lows, and the
gold.
shares GDX could not make new lows. So basically, is that going to be a dollar story too?
I think we saw a good bounce in the gold because sentiment got too bearish, but um, I do think that we haven't finished and that we're going to go tag 1,000, maybe 990. And
Okay.
I'll show you why. I'll just flick over to gold. Um,
So
so
I think that'll confound a lot of people, especially if the euro is going to trade 117 or so. For the euro to turn up and the dollar be weak and the gold continue its weakness,
right,
you're probably going to have people talking about $500 gold if we get down to 990.
it's
But
been a long time though since gold has traded as a risk off asset where you go and hide. I
good
don't.
point.
It's more risky, and I think that you know if the euro dollar really rallies, it's probably because stocks are going to sell off following a rate hike, and um, I don't know that they're going to necessarily run into gold. If you put a really big long-term fib on this as well, so can't remember where I got it from. Hold on.
Yeah, 61.8 back is 880, which was the high in.
Exactly. So I do think that that is probably, especially if you look at all the other fibs, like I always look when I put a Fibonacci on for a good reaction at the 23.6. It's a trick
Yeah.
somebody taught me, and it's like my handbag. It's so important. Like, so if I see it react there, I know it's probably going to work on all the other ones. So we got a good reaction at this 23.6. We oscillated around the 38.2, which is very common because it was sticky, and we got a 4-month bounce off the 50 fib. So you know that these fibs are working, and I think that yeah, that's where we're going, which is 890 on in the I've got futures chart, not spot. So
Okay,
880,
well, you know, if you
890.
look back to 1980, we had a different country invading Afghanistan. That was a 20-year high at 880.
Oh, there it is. Look, yeah. So
Yeah, so that would be, and that high held for 20 years, so what a natural place for it to come back to.
yeah, so there's the line.
Interesting.
Exactly. Yeah.
Maybe you could help me out with one more instrument, Nick. Are you
Go
up for
ahead.
it?
Yeah, no,
U.S.
I don't
dollar,
mind.
U.S. dollar yen to me has been an enigma. Dollar making all these new consecutive higher highs, and the yen hasn't made a new high for 8 months, maybe a year, and thinking that if we're right about a dollar pullback that continues for a while, and possibly you mentioned that you think the S&Ps might be vulnerable after a Fed hike. Today's pretty negative looking action to me. I actually think we have to test those September lows, take them out. Perhaps the yen is peaking here. I'd be interested in your view.
Okay.
Because there still are a lot of people saying 129, 130.
Okay, so I've got a yen chart here, and I'm just going to share it. Hold on.
And guys, I'm going to be, if you have any questions for Nick, go ahead, text them, and I'll pose them. But Nick is going to give us some clarity in what I think no one really has clarity in. Maybe Nick doesn't even have clarity in U.S. dollar yen. So I'm interested in her view since we trade the crosses.
Okay, first of all, I'm going to apologize to everybody. I've only got a yen futures chart, which is
That's
dollar
fine.
yen upside
We'll
down.
turn the chart upside down.
Okay. So I am bullish yen and I am bearish dollar yen.
Okay.
And this is why I think that from the August high, we've made an ABC correction, which I'm marking here. And here is. Oh, can you see my screen?
Okay, now I see just your icon, so you probably have to click the. There we go. We got it. Okay.
Okay, so this is a daily chart. I'll just take this off and draw it again. So this is a daily chart of the dollar, of the yen futures, which is dollar yen upside down. So we had a low in June and a low in August, which was the highs that you saw, and then since then, and a really strong rally, and then since then we have, I believe, made an ABC correction equal. So here's the first leg there. And there's the second leg there, and this line, which is what we're holding. And I think from here we should rally at least 78.6 and potentially to new highs. I think new highs. And I believe, I thought originally that this was an inverse head and shoulders pattern, but I think it's just a bit of a wedge. It might even sort of be a bit of a diamond, but I think that there's very good risk reward buying dips against this, and that will go higher from here. I've taken my moving averages off this chart, but I'm using them to get in, and so yeah, I'm bullish yen.
Okay, so if you're watching the futures chart, you prefer to trade yen futures instead of trading cash FX US? No.
It's just I only have limits for the futures. So if I want to do a cross, I have to leg in and out through all the different ones.
I see.
Yeah, at the moment.
Okay.
For what, like, I have a personal account, and no, I do spot dollar yen, and I'm bearish dollar yen spot. Yeah.
Okay.
Bullish
Anything
yen.
else you want to wrap it with, Nick?
No, I suppose the one that's confounding me most is Aussie dollar. I really want to be bullish Aussie dollar, but
Okay.
now I was long. I'm shaken out now, and I'm starting to think that this might be a bit of a wedge, which is frustrating. I was hoping
Okay.
that's
And why your bias in that? Because we all know
sorry.
why we. I'm curious why you want to be long Aussie. There's some reason that you have a bias for that.
Okay, I think
Okay, maybe we just saw the chart. That's why.
yeah, big month. This is my monthly, quarterly chart. So big fib levels. Um, yeah, just I believed I saw signs of bottoming, but you know how here's my other top tip of the day. Um, Crude oil likes the 78.6 above all others, the same way
Right.
that the DAX will always turn at a 61.8. But Aussie dollar, Euro sterling, and dollar yen will almost always go to an 886 if they can, which means that we might have another leg lower
Okay.
in Aussie dollar. When it
Okay.
can, it likes to go there. So
So that'd be
that's
around 66.
65, 60, yeah,
Hmm.
66.
What a
So,
great interview. I'm so glad I
um,
was persistent. I'm so glad, Nick. I was
really?
persistent, and you did a great job. And you know what? You edified me and the whole community here on FX Street, and
Oh,
anyone
do you
who
know what?
watches it.
What you do for traders is amazing, Dale. Like, every day you've got someone, and there's such a great free resource for people. Really, there was no Twitter, and I really went to very few, webinars or anything like that when I was learning to trade. It was really just trading forums, which feels a bit
Yes.
steam driven now. But
Yeah.
yeah, you can learn
Well,
so much if you want to.
thank you so much, Nick, and you contributed to my mission of trying to build up and edify traders every day. And I wish you and your family a great Christmas and New Year, and I hope
Oh,
that
thank
pips
you.
rain down on you because you and I are kind of thinking the same way here. So I think we're going to have a great year end and a fabulous 2016, Nick.
Yeah, no, thank you very much, Dale. Thanks.
And the best way for people to follow you, I believe the only way is at Nick Trades on your
Yeah,
Twitter handle. You don't have any kind of website or any other business model.
I'm afraid
You just share,
um,
huh?
at the moment, no, I'm just sharing, but I may be working
Yeah.
on something, so watch this space.
Okay. Well, you let me know, okay, Nick? And
Definitely, yeah,
really,
no, I definitely will.
Merry Christmas and Happy New Year to you and
Dale,
yours,
no,
Nick. Good
thank you, and it's so good to hear
Good.
you so well. Really
Oh,
good to hear
thank
you
you,
so
Nick.
well.
I'm glad to call you my trading warrior sister. Great
Oh,
interview.
thank you, Dale. Bye.
All right.